please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, let's drill it down to individual stocks. This is our movers and shakers segment, and the stock of the day is State Bank of India. 5.5% up today. It's seen a rally of more than 12% in the first 3 trading sessions of this week. Abhishek joins in with what brokerages are saying. Abhishek?
Well, Rima, you know, brokers remain upbeat on SBI. They have said that the worst in terms of asset quality recognition is over for SBI. However, due to elevated provisions that they expect in FY19, many of the brokerages have actually cut down on their earning estimate only for FY19. So if you look at Kotak, it is at 11% decline, Jefferies by 23%, Phillip Capital 38%, Axis Cap 15%, and Credit Suisse by 20%. However, analysts believe that SBI is the biggest beneficiary coming out of the NPA resolution, and that should provide cushion to SBI's price ahead. So therefore, they have mentioned that their target price is being reduced by 8 to 10%, and now the new range of target price is between 310 to 355. Let's listen into what the management have to say about their results.
25,000 crore is for the corporate. This is the most conservative estimate. And I don't think that even 25,000 crores will slip. But based on my guidance that our gross slippages in the current year will not exceed 2%. So even if I take a worst case scenario that 25,000 crore is NPA and 12 to 15,000 crore is retail NPA, so we are still very much within that guidance. As far as the growth is concerned, right now we have sufficient capital, but our estimate is that we may need around 20,000 crore odd amount.
All right, so that's the word from SBI. HPCL, in fact, the entire oil marketing pack is weak in trade. HPCL, of course, a double whammy also of disappointing results. Sonia?
Well, yes, the operational performance was well below what the street was estimating. I think that's a reason for the disappointment. The EBITDA actually fell by almost about 8.1%. The absolute number was also under pressure. The gross refining margins improved, though it was not as good as what the street was estimating. So it improved to $6.6 a barrel versus $6 a barrel earlier. CLSA maintains a sell call. They say that there are many headwinds going ahead for HPCL. The risk of the subsidy burden is quite high. That could have an impact on their earnings. Also, higher crude prices continue to be a big negative.
All right. Thank you very much for that. Let's shift our attention to Cipla. That stock is higher by close to about 3%. Ekta, the numbers were disappointing, but you know, our brokerage is upbeat. Do they think the worst is behind the pharma company?
Well, overall, the brokerages are quite mixed in terms of what Cipla reported. So, Edelweiss, for example, maintains its whole target price of 550. According to them, it reported a disappointing Q4. On the other hand, something like an ISEC has upgraded the stock to add from hold. They've revised the target price lower to 572. According to them, considering lesser dependence on US generic, improving margins and valuations are the reasons for the upgrade that has come through. Macquarie says it remains their preferred large cap pharma pick, and there was a strong like-to-like domestic sales growth that came through. Motilal has maintained a neutral with a target price of 540. They've cut the FY19-20 EPS by 8% and 9% respectively. And CNSA says it's a weak Q4 even after adjustments. They've cut the FY19-20 EPS by 18%, but they've maintained a buy with a target price of 750 rupees. In fact, let's listen in to what the management had to say on their conference call.
In terms of the core margins and the quality of earnings, Q4 is characterized by moderation in margins for us due to reverse seasonality effect for Indian business. While the seasonality and business mix had some impact during the quarter, the underlying gross margin profile for various businesses remains solid and healthy. EBITDA margins for the quarter also saw impact of certain one-time costs related to sales and distribution, employee recruitment and engagement, and some of the litigation-related expenses. Adjusted for this, our Q4 EBITDA trajectory was healthy.
All right, let's move on. Bata is up in trade after posting a revenue, EBITDA and profit growth above street expectations. We spoke to Ramkumar Gupta, the Director of Finance and CFO of the company, on the highlights of the quarter gone by and his outlook for the company in the coming year.
Like-to-like store growth is in single digit. Total turnover growth is around 6%, which is not comparable since these numbers are after GST implementation. If you see, this growth is lower double digit. If we compare like to like, average selling price is up by around 6 to 7%. Online contribution at present is around 3.5 to 4%. And yes, under this segment, we are planning to make around double in next 2 years. In the last quarter, we have added 19 new stores, and we have a plan to open around 100 new stores during this financial year.
And L&T Tech, what a day that stock is having, up about 7% now and continuing to build on gains. Rima, you went through the numbers in great detail. What was the big highlight?
Well, the fact that revenue continues to be very strong for the company, and even the guidance for the coming year is quite optimistic. That is the constant currency picture for the last 3 quarters. And you can see they're averaging between 7 to 9% for the last 3 quarters, well above what the industry is delivering. For the full year, they've seen an 18% plus constant currency growth, and the management is guiding for at least 16% organic growth in FY19. And they said that they will review the guidance as the quarters progress. They've also indicated that they're targeting $1 billion of revenues in FY21, with acquisitions contributing $120 million. The organic bit will be about $880 million. So that would imply that, the organic growth from FY19 to FY21 will be close to about 15%. Just a quick run through of the Q4 numbers for our viewers. On the whole, quite good. While the revenue growth we spoke about, there is a margin improvement of 75 basis points, which is driving a near 26% increase in the company's profitability. Brokerages upbeat. CLSA raises the target price to 1,600. So it's growth which is driving strong gains for L&T Technology this quarter.
And back to pharma then. So Dr. Reddy's overall numbers came in, they were below estimates, but largely in the range that the street had been working with. So EBITDA and margins disappointed, but in terms of regions, all the other markets except for India saw a bit of weakness. So let's just hear out what the management has to say in terms of the outlook now for FY19.
Pricing pressure was quite significant, and during the year as well as during the quarter. Of course, pricing is also dependent on the products where you have less competition, and then competition comes in and then the prices go down. So we witnessed some of that during the quarter. I think for the quarter it was higher than the average of the year. So it was close to somewhere between 18 to 20% for the quarter. But during the year average, I think it's in the teens. I don't see pricing pressure coming down. Pricing pressure will be there, especially as you launch new products and then competition comes in. We will see pricing pressure. My expectation is that it will still be double digit, maybe teens.
Okay, the next one on our radar is Minda Industries. Great session today, up 12%. Sonia joins in for more on that. Sonia, Minda Industries was quite the star through calendar year 16, calendar year 17. It's only this year the stock has not performed too much, but numbers are looking good.
Yes, numbers are looking very good. And this is almost a 10,000 crore company, market cap company. So I know we keep saying that they are auto ancillaries, but they're not small by any means. And it's not a stranger to gains. It's actually over the last 2 years, it's gone up more than 6 times in terms of a stock performance. Now, if you look at the numbers this time, very good. Revenues are up more than 50%. Profits have more than doubled. The EBITDA is up 2.5 times. And the margins have improved substantially. Of course, they have consolidated a lot of their group companies. So there is that bit added as well. But overall, the business is looking pretty strong for Minda Industries.
All right, Sonia, thanks very much for that. That's what on Minda. Also, the Madras High Court has banned the expansion of the Sterlite copper plant. Jude Sandit joins in with more details on that. Jude?
Well, in what must come as some semblance of a victory, 2 months, 100 days to be precise, of protests, at Tuticorin against the expansion of the Sterlite copper plant. The Madurai bench of the Madras High Court has banned the expansion of this plant, citing that the centre must look into the prospect of holding public hearings before granting environmental licenses to projects much like these. If you recall, there has been 100 days of protests where protesters have been alleging that the expansion plans of Sterlite Copper could impact the environment and the pollution levels of the city of Tuticorin. also directly impacting the food, agricultural produce and groundwater in the region. The protests, of course, took a tragic turn yesterday when police firing, we learn, has up to now killed at least 11 people and left over 30 injured. In fact, Actor-turned politician Kamal Hassan, the DNK's MK Stalin, are in Tuticorin today to visit families of those killed and, of course, those injured. So after a rather tragic turn, some semblance of victory for protesters at Tuticorin today.
Yes, 100th day of protest taking place at that particular plant. Thanks, Jude, for that. Let's move on. BIP Industries has also posted a strong set of earnings in the quarter gone by. We spoke to Dilip Piramal, the chairman of the company, on the outlook going ahead.
I feel that while having a 50% increase of profit as we had this year might be not possible to sustain over a longer period, but we are definitely looking forward to doing this, repeating this 32% CAGR rate of growth in the PAT for the next 5 years.
All right, let's quickly recap then the top stocks which are buzzing. There's SBI, HPCL, Cipla, Bata, Dr. Reddy's, L&T Tech, Minda Industries, Vedanta, as well as VIP. BLS International is on our radar after the company posted a weak set of earnings this quarter. Revenues have come in flat. Margins have declined, though, by 200 basis points. The company is also in alliance with Sopra Steria for delivery of contracts for UK visas and immigration. Shikhar Agarwal, the joint MD of the company, now joins in. Shikhar, good afternoon. Thanks much for joining in. It's been a strong year for your company now that you've won the UK services contract. What's the expected growth, therefore, in FY19?
See, as you know, BLS stands today in 62 countries with 2,325 offices working for 36 client governments. We have grown at EBITDA level by more than 92%, and at the PAT level we have grown 95% on a year-on-year basis, which I think is a tremendous growth. So this year has been a very good year for BLS. Going forward, as you know, Punjab government also, we are in talking terms with government and they have said that you delivered good service. So might be that the tender is extended. So the revenue will be clocked in for this year for Punjab government also. So this year we target to get a growth of 30 to 35% at least, at the PAT level for the company. As you talked about the contract that we have won for the government of UK in alliance with our strategic partner Sopra Steria, that's, I think, a big win for BLS. This contract in terms of revenue is bigger than the Spanish contract. We will clock 110 million pounds of revenue in 3 years for this contract.
Okay, $110 million is the value of the UK contract that you will get over 3 years. Will it be split equally in these 3 years, or do you expect it to start slow and ramp up as the years progress?
This contract is typically 3 to 5 years. 110 million would be in 3 years. We are expecting a margin of 15% at the PAT level at the minimum from this contract. And this contract also has a big scope of increased value-added services. So the contract revenue could uptake by more than 20%. Whereas we wish to maintain the margin percentage at minimum level of 15%. In 3 years, when you can divide 110 million pounds into, divide by 3, that is the revenue that we expect going forward. And if these contracts get extended to 5 years, then the revenue will definitely increase. In this contract, the service charges that we will charge from the applicants vary from 80 pounds to 10,000 pounds. So this is a very big strategic win for us, and it is a very lucrative contract where we see the profits going further and we are getting eligible for more bigger contracts going forward.
Okay, Shikhar, what's the outstanding that's due from the Punjab government, and by when can you expect this?
As we stand on date, we already got 45 odd crores in the last 2 months from the Punjab government. The outstanding as of date is 202 crore. Every month Punjab government has committed to pay us outstanding amount. In the budget of Punjab government also 200 crores has been allocated for the Seva Kendra project, which will be paid to us, and the same amount is pending. And we expect it to be cleared in the next 3-4 months.
Okay, so dues of 200 crores will be repaid, dues from the Punjab government will be repaid in 3 to 4 months. But is the Punjab contract definitely extended, or is it likely to be? I didn't catch what you told us earlier.
there is a big likelihood, as the government is still happy with the services that we have offered and there is no dispute with the services, and so there is a big likelihood, we have not received any official communication, but there is a big likelihood that the tender will be extended.
Okay. Are you in advanced talks with any other state to provide services like this?
See, as you know, in the government tenders, the timelines are rarely followed. You know, so we don't know if, for example, if in the tender criteria it is written that the result will be awarded in 3 months, they might extend it to 6 months or 1 year. So recent is a very deliberate term. But we are definitely, you know, in the advanced stages of many tenders, not only in India but abroad. As you know, that we've been working on the UK government tender for a long term, and the result just came in now. I think it is the biggest win for BLS till date. So we feel that on the basis of UK government tender, much more bigger tenders avenues have been opened for us, and we feel that going forward the revenue and PAT margins will be improved for BLS.
Okay, revenue and PAT margins to improve, but Shikhar, just for this quarter, the quarter gone by, what's the reason for the margin decline?
See, if you compare from the last quarter, there has been decline only of 1%, which is a marginal decline. The reason is the expenses that we have incurred for starting the new contracts. For example, the UK contract, there is a lot of new expenses for people to travel there and establish offices and everything. That has been the only reason. But if you see on a year-on-year basis, our margins have increased tremendously. The PAT has grown by 90%, which I think is a tremendous growth.
Okay, that's the word coming in from BLS International Services. This is a mid-cap e-governance IT company which provides passport visa services for various Indian states like Punjab as well as various countries. So they already had a contract from Spain, and now they won a contract from the UK government as well, which is positive because this is the first big contract that the company has won from a developed country. So that gives the company a lot of optimism about the coming years. Stock is higher by close to about 6.5%. NMDC, by the way, has increased the prices of fines and lumps. Let's get the chart up for you on your screen and find out if there has been any stock reaction to that particular development. Yes, indeed, the stock has recovered its losses and now is flattening out. Let's get you a CNBC TV18 exclusive then. We learned from sources that Dalmia Bharat will stick to its offer of around 6,600 crore rupees for Binani Cement, even as the deadline for revised bids ends today. Ritu Singh with these exclusive details. Ritu?
The tug of war for Binani Cement continues, and now we understand from sources that a day before the deadline to submit revised bids for the company is going to end on the 23rd of May, Dalmia Bharat Consortium has decided not to revise its bid. Do remember, Dalmia Bharat bid in a consortium with India Resurgence Fund, and their bid stands at 6,590 crore rupees. This stacks up against Ultratech's bid of 7,960 crore rupees, and the Committee of Creditors had allowed both of them to increase their bid and to match each other before that deadline ended. But as it stands, Dalmia Bharat will not be revising that bid. 24th May, in fact, is the date when the lenders will be voting on the final offers. But Dalmia says it will wait for the final verdict from NCLAT before it makes any move, and that hearing is scheduled on the 10th of July.
All right, Ritu, thanks very much for joining in with those details. Let's invite our technical experts now. Ashwini Gujral and Sandeep Wagle join in. Gentlemen, good afternoon to both of you. Ashwini, first to you. What are you making of the market? We've seen a bit of a bounce from the lows, actually, but it doesn't look to be nearly enough.
See, this bounce can extend further because my sense is that people went short when 10,500 broke in the morning. So those shorts are likely to cover by the end of the day. So that way, you know, Nifty, Bank Nifty, IT, everything could move higher. So having said that, for the moment, IT is doing strong. So mid-cap IT particularly, expanding on the upside. KPIT is a buy with a stop of 250, target of 266. Hexaware is a buy with a stop of 432, target of 455. And Sun TV is a buy with a stop of 934, target of 960.
Okay, Sandeep Wagle as well joins us on the show now. Sandeep, how would you approach trade today and your picks?
I would be mildly positive, and I would also expect some kind of an up move, but in a 50-70 point range in the Nifty. I would talk of a buy in a Tata Elxsi, stop loss of 1200, target of 1260. and a sell in a BPCL, stop loss 381, target 360.